Hello and welcome back to All Things Money. I'm David Blain, your host. Thank you for joining us today. We're going to jump right in the second segment here and start talking about some issues with college. We've got a lot of people out there. It's high school graduation time, people getting those letters of acceptance and trying to figure out what they're doing. We wanted to make sure that you had some input from us. If you have any questions on what we talk about or other college planning issues, by all means get in contact with us. Email is allthingsmoney@dlblain.com. The phone number 252-633-0107. And of course the website dlblain.com. I wanted to talk a little bit about saving for college. You know, in our office, for a lot of people, college, paying for college is certainly a large expenditure. A number of people that are able to just pay for it out of their current income. They simply, reduce their spending and are able to fund it out of their cash flow. If you're not in that particular situation, there are a number of ways to save for college. The education savings account, which frankly, the limits for that are so low that you're not going to save a whole lot. The benefit of that is it can be used for elementary and high school expenses. There's typically no deduction for it. The Section 529 plan has some redeeming qualities because you can get a tax deduction for it. Now, when investments, back in the late 90s, wow, it seems a long time ago, when the S&P 500 was averaging, 20% rate of return there for 5 or 6 years, tax deferral was a huge, huge thing. Interest rates were 7, 8%. And these savings plans for college, one of the benefits is they allow the money to grow tax deferred. Well, here we are, we fast forward to today, 2013, and although the market has been on a very good return, bonds not so much. So maybe your child is 10 or 12 years old and you're thinking about saving for college now, and they've got 5 or 6 years to go. The tax deferral is just not that big of an issue. There are, benefits to the 529 plans. If you start young, it certainly has a chance to grow tax-free. If your kid gets a scholarship or something like that, you can pass it along to another child. You could even hold on to it and give it to a grandchild someday. So they're not totally useless from that respect. But one thing I want to focus on is the tax deduction. Many states give an income tax deduction. In fact, I think this article here says 34 states now give a tax deduction for contributing to a 529 plan. Here in North Carolina, an individual can put $2,500 into the North Carolina plan and receive a tax deduction. A married couple can put up to $5,000 in and receive a tax deduction. If you're in the highest North Carolina tax bracket, 7.75%, that works out to about a $400 tax break for putting in $5,000 into a savings plan. Now, it doesn't matter how many children you have. You only get one, a maximum of $5,000 that you can take as a deduction. Now, some states allow you to put money into another state contribution. I know we have people outside of North Carolina listening to the show. Pennsylvania, Arizona, Maine, Missouri, and Kansas actually offer a tax break for their residents for putting it into an out-of-state plan. Interesting. Michigan allows a deduction to the extent that it exceeds any withdrawals. I know some people, which, it's the rule. There's nothing wrong with it. If you have a child in college and you need a tax deduction in 49 of the 50 states, we'll put the money in, $5,000, take the tax deduction, $400, and then take it out and pay for your kid's college. You get a $400 tax deduction, just for leaving it in for, a couple of days. There are a lot of things like that in the tax code, and that's what happens when politicians try to get too smart for themselves and they come up with these convoluted tax codes that allows people figure out ways, simple ways around these type of things. And that's a perfect example of Nothing wrong with it. It's nothing wrong with putting money in the 529 plan, taking a deduction, and then the next day or the next week taking it out and paying for your kid's college. That's nothing wrong with that. Perfectly legitimate. Now, in Michigan, they allow a deduction of up to $10,000 for a married couple. They only allow deduction up to the net. So if you put in $10,000, you take out $10,000, no tax deduction. We have a number of clients in Illinois. I forget the exact number, but it's something like $20-some thousand you can take a tax deduction for putting into a 529 plan. Now that's some big money. Once again, even there, if it's only for a year or so, it's certainly worth the tax deduction. You know, in North Carolina, you have to make that decision. You know, is a $400 at most tax deduction worth it for you? You know, you have to determine your own individual tax bracket. But in some states, it's a very good idea. Now, certainly, it's also a good way just to force yourself to save. If you're having a hard time saving, you know, you can force yourself to save for it. Now, if the money, the assets, when the assets are owned by a grandparent, it isn't even counted in the financial aid. But of course, the payments on behalf of the student, you know, count it as income for financial aid purposes. When we come back, that's the end of the second segment. We'll continue talking about some college planning, maybe about buying a condo for your child at college.